Well, welcome to another episode of The Interview with me, Aisha Faridi. Aurobindo Pharma, a company that's quietly building one of the most diversified growth engines in Indian pharmaceuticals. From Pen-G to injectables, biosimilars, CDMO partnerships, and a fast improving balance sheet. The company's story now blends scale, science, and of course, shareholder value. Joining me today, Venugopalan Muralidharan, the CEO, Europe Business, and Subramaniam Santhanam, CFO, Aurobindo Pharma, to decode what's next in this multi-pronged growth journey at Aurobindo Pharma. Gentlemen, both of you, thank you so much for your time today and speaking with me. Venu, if I could, start off the conversation with you. Aurobindo's growth story now spans Europe, the US, multiple verticals. Tell me what's driving this kind of momentum in Europe. I mean, is it new launches? Is it the product mix? Or price stabilization finally coming through?
Thank you, Aisha, for setting the tone. Yes, to answer your query, it is a multitude of items. What I can say is the range of products, the steady increase in the portfolio breadth, what we are achieving through in-house filings and in-licensing. At the same time, the launches, some of them are loss of exclusivity day one launches. And of course, availing the market opportunities, a well-set team who are very much tuned to the market and understanding of the market, operating in different market archetypes, whether it is tender generics or pharmacy-driven markets or prescription-driven markets. So multitude of items. Of course, I can go in depth when you want on any specific item, but I hope I have given you a flavor of what we are achieving in Europe now.
Oh, absolutely. You've set this tone, and I am going to talk to you about the individual specifics as well. But Mr. Subramanian, you've maintained a no new Capex stance for now. How long do you think this free cash phase sustain before growth investments resume?
See, what we said is we'll not put any new greenfield or brownfield expansion unless otherwise it has already been committed, right? What is happening is this greenfield or the brownfield, it takes a lot of gestation period. No, it takes more than 3 years like that. So we thought we'll give you a small pause and then try to ramp up the existing investments we have done so that we'll be able to add shareholder value. That is what we have done.
How long before we see any Capex?
No, we will be doing normal Capex, which will be somewhere around maybe around 150 to 200 million, which will be the sustenance capital, which we'll be incurring it, and the one which we have already committed. See, you have to understand the fact that we are already having more than 30 plants, and some of the plants are, we are also increasing the capacity on every plant by about 10 to 15% like that. So that Capex will be done. We will not go and then put a new Capex and start the process as a whole. That is what we meant.
Right. Venu, injectables, they've become a major focus area for you all now. How large can this business get for Aurobindo, say, over the next 3 to 5 years?
I'm sure in 3 to 5 years, today we are somewhere around 500 plus. 3 to 5 years, we should be going around, I think, in my view, we should be crossing easily 800 to 800 plus.
Right. Mr. Subramanian, return on equity, that's also improved very sharply, and you've got a very happy shareholder.
We are focusing on that. It'll move up consistently. Now it will start moving up.
Right. So I did want to talk about, the return on equity, Mr. Santhanam. What's driving this uplift, and can it be maintained without margin dilution or risks?
I think it can be maintained. We are working on that. I will not be able to tell you anything right now, but certainly it is on the top of the agenda, and we are working on that.
Right. Venu, you've also ramped up your biosimilars play, right? How close are you to key commercialization milestones in this very high value segment?
In Europe, Now we got 3 approvals in the EU through EMA, and also 1 approval with UK MHRA. And the good news is we have just commenced the billing in UK earlier this week. For first of the products, bevacizumab has commenced its sale to UK NHS, and of course that is just a start made.
Mr. Subramaniam, can you share more on the Merck-CDMO partnership? What kind of scale and revenue visibility does it offer?
Well, what has been said is probably next year, Q2 27, sometime like that, we will be able to install the plant. And after that, it will take a year, probably by Q2 28. Probably we will, Q2, Q3 of that year, we will start the plant. And maybe you can see the full impact of it in the year ending FY29.
Right. Venu, tell me, what about the Lannett acquisition? How's that progressing? Has it started materially strengthening your US footprint yet?
Obviously, this is one thing which we have been aiming for, and we are working on that to get the necessary approvals from the regulatory authorities. Hopefully, everything goes well. We'll be able to get it sometime in Q4. And we are very excited about that investment because as you see it, again, the capacity of around 4 billion, the capacity which is being used is around 1.4 billion. So there is a lot of opportunities there to improve upon the performance, and that is going to play a big role maybe in the next 2 to 3 years.
You didn't want to give us numbers, would you? What's the visibility like?
Yeah, see, today they have been doing around 300 million with a capacity of around 35 to 40%, 35%, right? And you work it out, how much it can go.
Fair point. We have a fair idea about that. But Mr. Subramanian, on the regulatory front, and just taking a leaf from what Venu was just saying, where does the Unit 3 re-inspection stand? And when is it that you expect full normalization?
See, we are requested for an inspection for UGI Unit 3, and we have been granted for an inspection. It can take place, within a stipulated period as per the US FDA. And we are looking forward to that inspection. Probably it may happen, hopefully everything goes well, probably it can happen before March 26, right? Or it can delay, but the probability is very high, sometime happening before March 20.
Mr. Muralidharan, just returning back to the PE.
March 26, not 27, March 26.
Okay, I figured. Just returning to the Pen-G leadership, that gives Aurobindo Pharma, I guess, a very strong strategic edge. Tell me, how critical is this in ensuring both supply security as well as profitability in antibiotics?
Yeah, this is a very good, actually, this in the PLI scheme, overall PLI scheme, this is one of the very good product which has been chosen by the government under the Atmanirbhar scheme. And we are very excited because originally in the early 2000s, we had a Pen-G plant in China, and after that, due to local policies, etc., we said we have given it up and then come, and now we have put the plant. The plant has been done, and we have established the process very nicely, and we have been able to produce around 500 tons month after month, and hopefully we will be able to increase it. And we are very positive, and we will be able to provide the health security for the nation on the Pen-G front.
Mr. Subramanian, also with cash flows improving for you now and leverage under control, should investors expect a buyback or higher dividend payout in the near term?
I think that I leave it to the board to decide. Instead of I am telling anything.
Right. Venu, would you want to add in anything here?
What I wish to add is the continued ramping up of the European business. with a specific focus on the bottom line, which we are doing it steadily and systematically, and the results are showing up as well. And the outlook for the upcoming period is looking bright, and I'm very bullish and confident about it. So that way, that is my contribution to the management who have reposed a strong confidence in Europe, and in the process, board will take further decisions.
Venu, I want to talk a little bit more about, global diversification. Aurobindo's portfolio now cuts across Pen-G, injectables, biosimilars, CDMO. Tell me, how is it that you prioritize capital and leadership bandwidth across so many growth engines?
Sure. See, if you look back where we started off as a plain vanilla generics player, and in the process, our design of our footprint is 9 Western European geography, 8 of these plus Poland. And this addresses 32 billions of the total overall 37 billion European generic market. Means, we are present in all major markets and covering the population. And from there, now we have started going towards differentiated offerings, novelty and related generics, which will be the products for the coming period, whether it is inhalation products, injectables, oncologicals, biosimilars, and patches. So this way, we are able to offer a wider range of products as stated by you, and the teams are well set and well trained or well tuned to derive the best mileage out of these differentiated offerings.
What do you have to say about the competitive landscape? Because, we're in the midst of a global reset in terms of how trade and businesses are run. I mean, global pharma majors are refocusing on supply security, on cost efficiency. Tell me, where does Aurobindo see its competitive edge? Is it going to be scale? Is it going to be cost base? Or is it going to be the pipeline that you have?
Again, it is a mix of all three. The range of products what we are offering, a very wide portfolio, and we are not just sticking to the in-house developments. Wherever needed, we are investing in licensing a portfolio of products or specific brands, as well as supply chain efficiency that has been considerably ramped up, and turnaround time at Malta, because every single batch coming from India needs to be tested and released for sale. So here we have particularly focused. In the process, we are able to save on working capital lockup, at the same time availing the market opportunities. And again, as I said, major markets are being well tapped. Just to give you a little more color, in the 9 markets with the front-end infrastructure where we are operating in 8 of these, we are in the top 10 ranking. 4 out of 8, we are in the top 5 ranking. So that speaks for itself. When we are talking of big pharma majors who have been ahead of us for a long period, Aurobindo has been able to stamp its class by moving up the ladder. And globally, this is the data vetted by Generics Bulletin. In the top 50 global generics companies, Aurobindo is ranked number 9, and in the European space, we are ranked number 7, and India is number 1.
But, Venu, with such a large Europe exposure, how is it that you're managing currency volatility and pricing pressure in your consolidated margins?
That is a challenge, and Europe challenges are quite a few. It is not just the price pressure, because we are operating in a market where we are answerable to multiple regulators, the European Commission, European Medicine Agency, European Parliament. There are newer challenges like the Urban Wastewater Treatment Directive or the Critical Medicine Act. So many things are happening. In addition, whether it is a Suez Transit, nitrosamines related challenges. So all these are there, but the only thing is the organization, the management has invested extensively towards overcoming these challenges, and we as the personnel who are operating in the European market are also rising up to the challenge. And in the process, we are availing the opportunities that is available in the market. And wherever price pressure is there, we definitely try to hold back on some sale, availing the opportunity. At the same time, this is a mix. Not every single product will eat the same margin, and we should be aware of that.
Mr. Subramanian, what is the innovation roadmap looking like? Because, like Venu was saying, what started off as generics has gone way beyond that. It's biosimilars. There are there plans to set up R&D towards, say, complex molecules or specialty products next?
Yeah, as you've seen, Aisha, we have been continuously incurring more than 5% in the R&D, and not only that, we have been embarking. We have totally 9 R&D centers, and multiple, and many of them on different places. Nowadays, we are focusing more on the respiratory, dermatology, biosimilars, CDMO, all these multiple areas we have been embarking on by different teams at different places. So once you aggregate everything, you can see the full result coming at some point of time very nicely. And another point which I want to say, we also last year entered into a R&D strategic alliance with a global pharma major in terms of one of the respiratory segments. And that is also going to help us out in the coming years. So these are all the things which is helping us and which will help us in the future also, going forward, translating into very good performance coming years.
Just to add here, 4 of the 9 R&D centers said by Subbu are in the US, focusing on high technology developments.
Yeah.
Right, interesting. So I have to talk about investor expectations as well then, Mr. Subramanian. Your stock is trading at a valuation discount despite improved fundamentals and the vision that you both just talked about and highlighted. What's the message to the long-term investors? Is the re-rating justified from here?
I think if you really see that despite various issues, our company has been performing in a sustainable manner quarter on quarter, which you have seen it in the latest results also. And we have been gaining for a good amount, good numbers going forward also. I'm sure at some point of time, the investors will appreciate these and start rewarding the company and rewarding the shareholders.
Would you like to add to this?
Sorry, missed your voice.
No, I was wondering if you would want to add to that. Any message to the long-term investors?
We are committed for a sustainable performance. That is the message we would like to give it.
Great. Okay, gentlemen, thank you so much, both of you, for your time today. Aurobindo Pharma clearly is a story of science meeting scale, a discipline driving diversification from Fenji to biosimilars, from Europe to the US. It's a pharma play rewriting its own script, one discipline, quarter at a time. But thank you so much for your time today, both of you.
Thank you.
Thank you, Aisha.
Thank you.
It has been a pleasure speaking to you. Thank you.